So today we are going over the long-awaited entries video, how to actually position yourself, how to spot market maker model phases and price, how to draw them, how to trade them with the models that I've taught you. So let's get it right into it. So here I have a rough schematic of a market maker buy model. Now first you must understand that every market maker model will look a little bit different, but it's all the same. It is literally all the same, and you will see. So this is an example of a turtle soup, basically. We take the range low, we target the range high. And the range high will be your, original consolidation. That's where it usually lies. Not always are we going to have the perfect original consolidation. It's fine if you don't. You just want to see low resistance like built, basically. Um, so we take this low if time is meeting price, right? So let's say if this is Asia highs, and then we're just retracing in the previous two sessions. Let's say 10 a.m. opens here. All right, so what would this be? If we have SMT, so if there's no SMT here, like this, like a bearish SMT lower, then we need SMT at the smart money reversal on the lower time frames, okay? So if there is SMT, we don't necessarily need it right here. But what would this be? First of all, we'd be anticipating, if we're bullish, a New York reversal already. But now we have time meeting price, right? We have the 10 a.m. open, we have New York session, we have the previous two sessions, right? So that's time right there, aligning with our idea. And then we're expecting open, low, high, close. This is basically my strategy. I just pick, or I just trade the 10 a.m. power of 3, or then if you're trading Forex, it's the 9 a.m. the New York. Um, I'll get into how to trade London too as well. I think it's like the 5 a.m. or the 1 a.m. candle or something. But yeah. Okay, so basically, the first break in a market maker model is called the smart money reversal. Okay. Now, do we know that this is going to reverse right off rip because it could easily go down? No. So this is the 2022 model, and we don't trade this. It's significantly lower probability. Now, there's certain times where I will trade the smart money reversal. This is called the lowest buy, by the way. We break the high, and then um, basically the 2020 model is the lowest buy. Excuse me, it's not the smart money reversal. Smart money reversal is just where we expect price to reverse. So you don't really know if it's going to reverse when you're trading the lowest buy. But as soon as you leave this area, right, we're going to create an order block usually off of the low risk buy. It could be the breaker, an order block, or a fair value gap in here. It doesn't really matter. So it's going to distribute higher. In the retracements back to the PDA that formed off the low risk buy is your first stage. It's where you get in for the first stage. All right. And then price will leave, usually with speed, guys. So these first two stages are usually going to be with speed, especially the second stage. And these can look both different, especially the second stage. Um, these are really just you're going to see the first stage, the lowest buy, and they're all the same. It's going to look generally the same, but the way this forms can be different. But we're going to leave, and then the retracement from the retracement high to the first stage low, distribution low, is going to be your second stage distribution. Now, it can be viewed many ways. You can enter off this order block here. Right, that could be second stage to go higher. You could wait for an intermediate term low if you want to enter on high resistance, and we created a breaker block here, an order block here, and you can enter off that as your second stage. So this is what I mean, and this would be considered the silver bullet. So when a intermediate term low gets created, right, just simply like this, right? We sweep below, right? This is your silver bullet. Or you can wait for a swing point to form like this, and then enter like that. But I don't really do that. I don't really need to. I don't see the point of waiting for all that. The MMXM trader says that when this intermediate term low is formed, this can be the silver bullet or this, right? Once this, you have a short-term low on either side. This is your intermediate term low. This can be a trade also if the draw liquidity is not taken. So really, you can get in, right, however you want. It's all up to you how you trade, but I'll show you how I trade it. Um, and yeah, generally I like to see the second stage low, or where I'm entering, hit premium discount um, of some range, because if you're going to enter an order block like up here, right, I really want it to align with something to the left, like some mitigation area, and I'm going to show you how I use mitigation. So yeah, this is a rough depiction how to trade power of three. There's many ways. So the 4-hour candle can open literally right here. And what would I expect? I already expect an open low high close, and I expect price to distribute. I don't need to see like a low, really a big retracement with 10 a.m. open, because what happened previous to the open? We always want to ask yourself that. Manipulation happened. So if 9:30 manipulates, what does 10 a.m. do? Distribute, right, to the draw on liquidity. And you're going to get very like or low resistance runs um, to the draw with speed. It's going to attack that low resistance liquidity that's created. And I'm going to really teach you guys how to trade with daily profiles. It's insane how good it is. But yeah, this is a rough depiction. Now I'm going to show you some examples. I'm going to show you a lot of things right here. Okay, why is it doing this? Bear with me, it freaking did it backwards. Okay, we have to start here, I think. Yeah, it's gonna go backwards, but okay, so this is the daily time frame. All right, so if you know my turtle soup model, right, we're trading this day right here. So we have the turtle soup model confirmed. The weekly open is right here. So what would this be confirmed as? This would be confirmed as a Thursday consolidation reversal profile. So we expect uh, Friday to expand, right? If you know my model, we order pair the range high and attack that range low inside of this fair value gap. So now let's go to the, sorry, I don't know why it's doing this, bro. So this is the first trade that I took, okay? So I'm just projecting really any low. You can project this low because look at that. And then what does 9:30 do? Or sorry, 8:30, it expands. So 8:30, we can use red folder news. A lot of times it's going to be the manipulation, or 9:30 will, and then 10 a.m. will expand lower. So look, we hit this deviation. Sorry, I gotta find the hourly actually. Sorry, this is a shit show right now. What the fuck? This is annoying. Is this it? Maybe I didn't mark it. Maybe I didn't save it. Whoops. There's something to the left where we're hitting. It's like a swing point or some shit. And then let me try to find it, dude. I'm sorry about this. Bro, what the fuck? Bro, I literally checked this and like organized itself. Alright, so we're basically trading this. It's really the same thing on the daily. So we take out the range high and we're distributing to the range low. So this in itself is a market maker model. So look what happens, 10 a.m. So on the other asset, we open high, taking out external, low close is what we're expecting, and we already have a bearish bias. So this is time meeting price. What is over here? London or Asia lows. So just like I said, Asia, London, um, retracing into a POI. We expect price to distribute into a New York reversal. It also aligns with this negative 40. Let me try to find this thing real quick for y'all. Okay, here it is. All right, so this is that range low. You can have your original consolidation. Like I said, you're not going to always have perfect little consolidations. You have another one right here. So 10 a.m. opens. We put in a low. With this candle here, or this move up, we create that SMT. We have that high resistance run, and then we distribute lower. So what is this little pullback here? The first break and the pullback is your low risk sell. So now whatever PDA forms off of this, is your what do you call it? first stage distribution. So we didn't actually chain of state delivery here. I'm going to show you guys in this last slide how we use mitigation, but essentially it is a fair value gap that got respected on the sell side of the curve. We drag that out in time, and you're going to see price redistribute inside of those areas. And you want to use PDAs that align in that area and that get created off of that area. So yeah, so the low risk sell, we have that unicorn model, right? Breaker plus fair value gap. And notice what we have here. We have this fair value gap that got respected. And it has to break structure, by the way. It has to break some high for me to classify it as high probable. Because fair value gaps, when they get respected and then disrespected, they become high probable inverses. All right, so we have that first stage. We're leaving. We're pulling back. Like I said, it's going to look many different ways. We sweep this little high right here. And then again, it's overlapping with this fair value gap. As you see, it got respected right here and distributed. So it's essentially old buying into new selling, right? So you could enter this. I mean, it's not ideal because your stop loss is massive, but there's actually another market maker model inside of here. But like I said, a lot of times it's going to be speed. This is why this is so good. So now let's go into this here. Okay, so we break down. This is the same day, by the way, and this is how we get back in, right? Using fractals. So we have a 15-minute range. So now we're just going from internal range to external range. And what do we have? What is this first break? The low risk sell. But I can trade the low risk sell because I'm confirming on the lower time frames. So let's go ahead and find that real quick. Here it is. All right, so we get that smart money reversal. Like I said, we don't have SMT, so I need SMT on the lower time frames ideally. And then the first break, like I said, it's going to present the low risk sell. And whatever PD array forms this order block, right, will be your first stage distribution. That's where I entered. We also have SMT there. And then we distribute lower. And what do we have? A swing point here, swing point down here. That's your premium discount. You have an order block, or you have these order blocks, or you know these this fair value gap. That's your second stage distribution with speed. And yeah, I mean it's pretty simple, right? Internal to external, and it's the same thing every single time. And now you will see. Let me try to find it. Jesus, dude. Now this is the 15-minute, but this is the whole day played out. So you have the smart money reversal. In New York, we traded this to this low, and then we traded the low risk sell. We traded internal to external. And you just see there's really no POI here. There's an order block. You can trade this. I didn't trade this. And then you have the first stage, right? Because it's the order block that formed off the smart money reversal. And then, yeah, we really just get that displacement, like I said, with speed. And then this little fair value gap here aligned with this fair value gaps over here. You get that second stage, but I wouldn't enter this as too low. So let's try to find this other example. Oh yeah, so let me go over a entry model for you guys, and this is what I classify as a high probable chain of state delivery or order block. Okay, so it's basically a series of down close candles that created a fair value gap, right? And then once we displace through that, we have a fair value gap before we CSD basically, or created inside, right? So it's basically like almost like a BPR. Think of it like that. It's aggressive in, aggressive out, and only big money can do this. They can only move the market like this. And obviously we have to hit a key level, so you can use this after an intermediate term high or a short term high gets taken, whatever. Yeah, so you can read this. Ideally, a fair value gap is created before the CSD, BPR. If not, CSD must create one. Yeah, so if we displace and create one over here, that's fine. Like outside of the CSD, that's cool too. And you can just enter on the series of order blocks. You can enter on the fair value gap. It's completely up to you. But now we have three PD arrays aligned: an inverse fair value gap, a fair value gap, and an order block. So let me try to find Okay, good. And then I'm going to show you this first, actually. So, yeah, so this is just that that fair value gap mitigation that I use. So I accidentally do this on the 15-minute. There's a 15-minute fair value gap here, and you can see this little fair value gap too. That's being respected. So drag that out in time, and now you have right an area for redistribution, and any fair value gap that aligns with this area is high probable. But again, we're trading the distribution phases. So the PDAs that form off of this, so this order block, right, is what we want to enter on, right? So this is technically the low risk sell. It just didn't um, retrace much because this is the smart money reversal up here, and then we distribute lower, first retracement, low risk sell, and now this right here, when we pull back, is where we expect first stage distribution. I'm going to show you the guy this as well. So you see this fair value gap that got respected, drag that out in time, it aligns with these order blocks. So you get very nice areas, very nice confluences. The reason why I don't like to use order blocks is because it's too subjective. There's too many order blocks, you feel me? Um, so you can use fair value gaps regardless. Um, and yeah, you can see the order blocks that I'm talking about. So you have a fair value gap here and a fair value gap here before it breaks. You can use this as a high probable market structure shift too. You have a fair value gap here and a fair value gap here. See how price comes and takes that, or tags this order block low combined with this fair value gap. This is second stage distribution. So now let's get into this other example. Okay, so in this example, we have Asia low, us retracing again into an external point with SMT. So now we're just trading, we're essentially just trading external to internal. So what do we have here? The first break, what do we have? Again, that high probable smart money reversal or order block. We have a fair value gap here, fair value gap here, and this is where the low risk sell happens, right? We distribute lower. So what is this order block that forms off of the low risk sell? It is the first stage distribution. This is the hourly, by the way, guys. Um, yeah, Tuesday is the high of the week, so we're already expecting lower prices. And we have that new day opening gap alignment here. So what is this fair value gap? We're expecting second stage distribution. And like I said, this is like the silver bullet when we take out a high. So really, this is like a market maker model inside of a market maker model. You have the previous day's low here, and we're taking out a short-term high. So what happened previously before the 10 a.m. open? Manipulation. So I expect on a lower time frame us to retrace and then just distribute. So when this manipulation happens, what already is occurring before this open? A market maker model. So likely the smart money reversal already happened, the lowest buy already happened, and possibly first stage distribution already happened. So I'm looking to catch the second stage distribution, right? So yeah, as you see here, 10 a.m. second stage distribution silver bullet to the previous day's low. So yeah, that was a lot of yap, but yeah. What is this? I'm so confused. Am I showing the right thing here? I'm not. I'm so confused. Oh, I'm so sorry, guys. This was the higher time frame. This is the 1 hour for this example. Sorry, this is a shit show, bro, but it like mixed this shit up. So excuse me. I'm sure you guys don't mind. So this is the hourly time frame, okay? And this is the let me find this shit, dude. This is the market make model. God damn. So you have the first CSD. So this is that little swing point in the hourly. Okay, so buy stops taken, sell program activated. We get that distribution lower, that displacement, I mean. And like I said, it can look many different ways. So I enter after 10 a.m., which is right here. You see this little short-term high gets taken, but we respect this order block. So you can classify this as the lowest buy or whatever, dude. Doesn't really matter. When we displace lower, this is when we get that uh, first stage. So as you see, first stage is right at 10 a.m. open. So this is, you can just mark XU when this shit opens, honestly, and put your stop loss here. and you get that high probable order block, right? Fair value gaps, fair value gap through it, and you get the same thing over here. Like, see that balanced price range? Like, you don't have to enter on the balanced price range, but you just want to see it. So order block, or sorry, fair value gap up, fair value gap down. What is this? PDA that was formed off the first stage, it's just second stage when it comes back, right? And we sweep this little high. And so this this order block here is your silver bullet, right? So second stage, this is the most high probable one right here. When we sweep a high, you get on this order block to target that previous day's low. I think that's everything over here. I do apologize. So essentially, all we're doing is the high day is put in on London session, right? So the candle opens like right here, open, high, low, close. This is the daily candle. And we're just trading the New York continuation, right? So you have short-term high, long-term high, intermediate-term high, anticipation, and then you get that distribution, right? So yeah, sorry for the gap there. Sorry if that it wasn't organized, but I literally checked if it was clean, and it was, but I don't know what happened. So yeah, I already showed you guys this, so now let's go to the daily, where I'm going to show you 2 examples today. It literally happened, like I'm telling you, this shit happens a lot. And not all market maker models are meant to be, the same hype, like probability and stuff. We're going to go over some of that stuff. But yeah. So this is gold. We open up the weekly candle inside of premium and discount, right? So we have this SMT. We have this fair value gap. So what a Monday do? We always want to trade the day after a key level is hit, ideally. And that's what we do here. So if we're expecting lower prices, we expect an open high, low close. And if we're expecting reversal, we expect open low, high close. So either way, we have to see higher prices, right? But what we get is SMT with the previous day's low. So on the other asset, which is silver, we create that Tuesday low of the week. And all we're trading is to the previous day's high, essentially, this fair value gap. So that's our idea. And now we need to drop to a lower time frame. What do we have? Right, we're using daily profiles. Let me just turn this shit on. We always want to use daily profiles to support our idea. So what do we have? Asia high, retracement, key level, right? You have this BPR here. And then you have SMT. So SMT alone can be a trigger aligned with this idea. Right, so when does this candle open? 1 a.m. The 4-hour open, I think. Let me like fucking double check that shit. I don't really trade the 1 a.m. I'm trade. Okay, this. I got that memory, boy. Okay, so look. So open, low, high, close. What confirms that? First of all, we have Asia highs to target and the previous day's high. And we're already in a key level, and this SMT confirms that. And we're going to drop down. So let me just delete this. So let me just show you two. New York continuation. This is ugly as shit. But what do? We come into this breaker plus fair value gap aligned with the new week opening gap, and you see how we can trade that. But it's just super choppy, so I'm not even going to go over it. It's also not in session, so that's probably why. Let's go over this. Let me turn this off so y'all can like actually see. All right. So we have that new day opening gap over here. So I always want to use that. All right, so what is the first break, right? That is the low risk buy. The retracement is the lowest buy. So you see it comes into the fair value gap. I wouldn't suggest trading this unless you have context like this. And with that order block model like I told you. So we have that aggressive move down with the fair value gap, and we have aggressive move up with the fair value gap. So you can already see this model playing out. You have the erosion consolidation up here, which is time-based. That's important, right? You have that retracement. You have the open, low, high, close. You have all these things aligning, like literally everything aligning, right? And then the PDA, the PDA that forms off of the low risk buy, which is the series of down close candles, is your first stage distribution. Okay, so this is where you want to enter. That's one entry. And now we close over the new week opening gap. And this, like I said, the first retracement, or the retracement after this first distribution is your second stage. And like I said, it can look different in many ways. So what do we get? Expansion, consolidation, expansion, IPTA. And I also want to say this. Ideally, guys, you want to enter from the consolidation high, drag that out to the smart universal low. You want to enter ideally in the, let me just pull this out. Really the 50%, but really this quadrant. Like you don't want to enter this top quadrant, okay? So somewhere just underneath the um, third, the top quartile or whatever the fuck, dude. So yeah, now let's go into gold, and I'm gonna end the video. So this is like a quick video, bro. If this shit froze or something, I'm gonna be pissed. Now let's go over oil. There's a really clean one on a US, sorry, InQ, but we'll get into that. I'm not gonna go over that. I didn't mark it up. I showed it in the MMXM chat for those of you in T-Trades Discord. So what is this right here? So we're just displacing lower. It's more of an intraday market maker model where the previous day expanded, and then once time shows you, as in the daily profile shows you that we're going to it just shows you that we're going to retrace, right? There's no higher resistance created for us to really distribute higher. So if we like took out the previous day's low and then CSD'd, I wouldn't look to sell really because the daily profile wouldn't match, especially if this is London low of the day. But again, I'm gonna go over daily profiles in another video. It's pretty simple, like honestly, and I hope this is simple to you guys too. So you have the previous day's low to target. It's always your MMXM models. If you have the previous day's low to target and or Asia session to target, just write that down. You're gonna have the best low resistance runs when time meets price. So let's look here. So as you see, we have this just simple, right, internal to external. Let's drop down. So what do I mean by time meeting price? Right, that 4-hour candle open, 5 a.m. open high, manipulation, other asset takes out the high, low, close. We close somewhere down here. So this first break would be your low risk buy. Ideally, we, like tag this area, but we don't. So this is kind of considered the low risk sell. Sorry, I said buy, it's sell. And then again, the order block that is created is your first stage distribution area to get in. Right, so this is the 15-minute fair value gap. This is that 5-minute fair value gap. Drag that out in time. You have all this alignment, and yeah, you just get really easy trades, bro, with speed. You see all these always speed? I could show you 1,000 examples. They all look the same. And another tip: when the drawn liquidity is taken, I'm literally not looking to trade, especially if I open the charts and I see this. Like, let's just say I open the charts right here. Bro, I'm not trading this day because unless we do this, right? We retrace into a PDA or something. There's just no point. You want to trade this because now you have the high resistance run on the daily up here, right? So now you're targeting the daily this low. So you have intermediate term liquidity, sell side liquidity aligned with higher time frame here. But now if you just enter, if you're entering short here, you don't have intermediate term liquidity to target. Like this would be considered like low hanging fruit almost. But I can get into that. I can get into like low probability versus high probability MMXMs. But yeah, I'm gonna leave y'all with that. Let me know what you think, and yeah, catch y'all later. Thanks for watching. Subscribe, even though I don't really care.